Welcome to Let's Talk Business. Let's Talk Business is a free Wednesday webinar that we do at the Washington Center for Women in Business, which I'll tell you a little bit more about. And today's topic is Washington State's Paid Family and Medical Leave Program. This is such an important one for small business owners to know, and I'm really excited that we'll be able to record it so that you'll be able to refer back to this recording and these slides when you have any questions. So before we really get into the meat of it, this webinar is being recorded, so if you have to leave early or if you want to listen to it again for any reason, this will be the recording will be in your inbox later today. In between questions that you might have or comments that you may have, if you wanted to mute yourself by pressing the microphone button either at the top here on the bar or next to your name under attendees, that just helps from background noise and helps make sure that everybody can hear. Audio, if you're having trouble hearing us for any reason, feel free to use the phone audio on the audio pane. I find it's much better and a little more reliable than the computer audio. If you're listening on your computer speakers right now and have no problem, that's okay. No need to change. And lastly, if you have questions, we definitely want to make sure that we get to those. You can either raise your hand, which is this symbol here on your control panel, and that'll let us know that you're going to verbally ask a question or audibly, or you can type it into the chat box right here. And Sylvia, I will read those out to you. Sylvia won't be able to see the comments, but I will make sure that she knows about them. So a little bit about the Washington Center for Women in Business and why we're really here and why we do these Let's Talk Business webinars. We are a women's business center funded in part by the U.S. Small Business Administration, the SBA, and our goal is to help women who want to start a business, or if they're in business, how can we help them overcome hurdles, grow, gain more profits, reach the goals that they want to do. You can see on the screen, those are just some of the things that we can help you with. Really, we meet the business kind of where they are in business and help them overcome. We provide the services either in workshops like we have today, online or in person, or via one-on-one business coaching. That's where you would either call in or come into the office, and you would talk one-on-one with our business coach, Christine Buckley or Cheryl Selby, in order to make all of your, hi there, to get all the information that you needed. We do cover the state of Washington. We are located in Lacey, Washington, but we do have phones, Skyping, emailing, that kind of things available. First time you meet with us, it is free. After that, it's $25 for a 1-hour session, but we do have scholarships available. We never want the $25 to be a barrier to you getting the information you need. So please contact us about a scholarship if necessary. And my name is Tracy Hansen. My contact information is on the screen there, as well as the rest of the staff from the WCWB. And I won't go over these in detail, but they'll be in your follow-up email, just some of the other topics that we have coming up on Let's Talk Business. And with that, Sylvia, I am on your first slide, and I'll leave it to you.
Perfect. Thank you. Can you hear me, Tracy? Is everything
yes,
okay?
Ma'am.
Perfect. All right. Well, thank you, Tracy, so much for hosting this. I greatly appreciate this, and thank you, everyone, for participating. I'm here to talk about the new Washington Paid Family and Medical Leave Program, which is being administered by the Employment Securities Department. As Tracy said, if you have any questions, feel free to ask them in the chat box. We can do them however Tracy wants. I don't mind being interrupted. So let's move on to the next slide. So a little bit about the history of this program. So in 2007, the bill was passed in the legislature, and it didn't have a funding component. And so in 2015, as a state, we were able to receive a grant to begin doing a study on how this program would really help us in Washington and how it could be the most effective. After that grant, we had employers and employees come to the table and create this bill that was passed in 2017. Those employers and employees are still a part of our team. They're our advisory committee, and that's something we're really proud of because we're really trying to create the best program for the state of Washington. We started accepting what we call voluntary plans, which I will talk about later on, and now we're looking on to 2019 and employer responsibilities, and then in 2020, employees will be able to receive the benefit. Next slide. We are the 5th state in the United States to offer a program like this, and we are the first state to not already have a state-run short-term disability program. So the other states who had this already had a statewide short-term disability program that they ran, and they just kind of extended the benefits. So we're the first ones to kind of take this whole program on, and that's why Employment Securities is really trying to make sure that everyone is aware of it, because one of the biggest issues has been that people aren't aware that this program exists. Next slide. We talk about this a lot because we are Employment Securities Department, and not everybody has to deal with unemployment insurance. So some people aren't used to dealing with us. Also, because our program is paid family and medical leave, a lot of people, a lot of small businesses don't qualify for FMLA, so they believe that they don't qualify for this program. And this is to tell you that that is incorrect. If you have even one employee in the state of Washington, chances are you have responsibilities under this program. So we're really trying to get out there and make sure that everyone is ready for January 1st, 2019, when this program will start. Next slide. So here's a quick timeline of our program. So starting January 1st of 2019, employers need to start collecting the premium from their employees. Talk about how we do that a little bit later. And then in April of 2019, after you've been collecting this for the first quarter, you will need to do your first report to Employment Securities Department about what you've collected, reporting hours and wages. So that's really what we're looking at for the next year, is kind of that reporting and building of that hours that employees need in order to qualify, because in 2020, every employee will be able to receive this benefit. Next slide. So when we talk about paid family and medical leave, a lot of people kind of just associate it with the regular maternal and paternal care, which is definitely a part of this program. It's under our family leave umbrella, but it's more than that. It's the ability to stay home to take care of a sick family member. It's the ability, even under certain military-related events, that you could be able to take that time, paid time off, to do things before you have to go back to work. Now we call that family leave. And under the other umbrella, we have what we call medical leave. And that's what a lot of employers would associate with short-term disability. And so it's that ability to take care of yourself without having to worry about your finances. This isn't, I woke up with a headache today, so I'm not going in. This is, I need knee surgery and I'm going to need 6 weeks to recover. How can I do that and still be able to pay my bills? Next slide. The benefits that are received through this program is a weekly wage replacement. It ends up being a proportion of your weekly wage, and it depends. The highest you can get is about 95%, and that's a minimum of $100 and a maximum of $1,000 on that weekly wage replacement. So you would receive that weekly, and you could receive up to 12 weeks of paid leave. If I said up to, not you will receive 12 weeks. It really depends on your medical need. So there will be a medical oversight component to this. There are circumstances where you could receive up to 18 weeks, and those 18 weeks are for bed rest during a pregnancy if there's complications, to then still let the mother have that maternity time when the baby is born. Next slide. This is an example of what we consider family. I show this to you because it's a little bit different than FMLA. Ours is a little more extensive. So if you see, we include grandparents and in-laws and siblings and step. And those are not a part of FMLA. So just so you're aware, our definition of family is a little more extensive than FMLA. Next slide. So this is how we envision this program working. Again, this is completely administered by Employment Securities Department. So an employee will be working, their employer will be reporting their hours and wages with some other information. Then something would happen that would be a covered event. Now, that something can be something planned, like I need to have knee surgery in 6 weeks. I would give my employer a 30-day notice saying I'm going to be off for knee surgery. I would then file my claim through Employment Securities Department. Employment Securities Department would ask me for what I need. They would be the ones who would be administering the program, collecting the paperwork, doing all the administrative stuff. And then once I would be approved, and Employment Securities would let my employer know, and they would let me know that I'm approved, and then everything would be ready for me to take the leave, and I would be receiving those benefits from Employment Securities. So that wouldn't be the employer paying on that weekly basis. Life doesn't always work out so planned, so we do consider unplanned leave as well. For example, if I get in a car accident and have to have emergency back surgery, I would still qualify for this program. I would just still need to notify my employer that I'm on leave because I had this accident. I'm going to have back surgery. And then I would apply through Employment Securities Department again. They would be the ones collecting all the paperwork. And then once they approved me, I would be receiving my benefits from Employment Securities Department. Next slide. So in order to qualify for this program, an employee needs to have worked 820 hours in the last 4 completed calendar quarters. That's why we need every employee to report hours and wages, because this isn't based on employer. This is based on an employee and how much they have worked. That's what we're calling portability. So if an employee works 2 part-time jobs, they're accruing those hours towards that 820 hours. Also, if I quit my job in April and get a new job, it doesn't mean that my count starts back from 0. We're still accruing that time and trying to hit that 820 hour mark. So what matters is that the employee has worked during those last 4 quarters and that they've reached that 820 hours. That's why we're asking everybody to give hours and wages. Next slide. Here's an example of what the premium is. So a premium for an employee would be 0.4% of their gross paycheck. That's every time they get paid. And it ends up being that the employee pays 63% of the premium and the employer pays 37%. So they don't pay that 0.4%, they pay 63% of that 0.4%. If you're an employer with less than 50 employees, you do not have to pay that 37% of the premium. You still report your employees' hours and wages. You're still collecting from your employees their premium, and your employees are still eligible for the full benefit if they choose to take this leave. It's just a way to not have an extra monetary budget added to a small business. You could, as an employer, choose to pay as much of the premium as you want for the employee, but the most you can collect from your employee is 63%. Okay, next slide. So here's an example. So this person makes $2,500 in a pay cycle, let's say on a biweekly basis. This is their gross wage. So what you would do to calculate that is this 2-step process. So as you see, their premium total is $10. Now that is not what they are paying. That is what is expected for them as an employee. Then you go on to do the second step, and if you see there, the employee is only going to pay $6.33. That's the most an employer can collect from an employee. Now, if an employer has 50 or over employees, then they collect the $3.67. They pay, the $3.67. If they have less than 50, they don't have to pay that $3.67. It is up to them to decide how they want to do that. All right, next slide. So here's what reporting is going to look like. Employers will start remitting premiums to ESD on a quarterly basis, with the first one being due by April 30th. So the whole month of April. And as you see there, we're operating under calendar quarters, and you have the month after the calendar quarter ends to report to Employment Securities Department. So your first quarter is going to be January through March. And you will be collecting the premium starting your first paycheck that you pay out in January, even if it includes December hours and wages. It's really as paid. And you will then be ready to report the full name, social security number, wages earned, hours worked, and total premium that you've deducted. Next slide. Premiums really should be withheld with each paycheck. Employers cannot go back and collect a missed premium. So if April rolls around and you haven't been collecting this premium from your employees, you cannot go back and collect it from them now. It is up to you to then pay that expense. That's why we are trying to make sure that everyone knows and is ready for January 1st. Our reporting portal will be similar to Employment Securities Department, but it won't be the same. It's going to be a different portal. We know it would be easier if it was one big, beautiful report, but because unemployment insurance is federal and paid family medical leave is state, we're not able yet to combine both those programs. So we are not able to make it one report yet. Next slide. The first report, like I said, will be due April 2019, and you're going to report wages and hours worked. And then the department will calculate the premium bill. So once you've filled in all the information and how much you've collected, they will then give you an amount that you need to pay. Now, if you have less than 50 employees, that amount might be zero. If you have over 50, then it would give you the amount. How that billing is going to look, we just don't know yet. And then you would submit that payment back to Employment Securities Department. It can't be the same payment. You can't mix your unemployment insurance and your paid family and medical leave payment into the same check. It has to be two separate payments. Next slide. You've heard me say that if you have less than 50, you don't have to pay the employer portion of the premium. If you do choose to pay the employer portion of the premium or have 50 to 150 employees, you're eligible for what we're calling small business assistance grants. And that is up to $3,000 every time one of your employee is on this leave. We see this as a way to help cover the cost of hiring temporary employees or maybe paying overtime to other employees while your employee is on leave. And you can receive this up to 10 times a year, anytime in 2020 that your employee is on paid family and medical leave. Next slide. So when we talk about business size, we get a lot of questions about how we are actually calculating the business size. So we are counting all employees, so not just full-time equivalent employees. Any employee that walks through your door, if they've worked for you a couple of hours in that quarter, they are part of your employee count. What we will do is have you report that to us on a quarterly basis, and then every September we will take the average of what you reported for the last 4 quarters. So as you see in this example here, even though in the first 3 quarters an employer has hit the under 50 mark, that last quarter made their average go up, and so they are over 50 employees. Now, because this program is new, starting in April, we are just going to use the number that you report in April. So whatever number you report to us as part of your employee count will be your number until September of 2019. In September of 2019, we will then take the average of what you've reported so far, and that will be your number until September of 2020, where we'll be able to have our first 4 full quarters that give us that average. So that's how we're looking at that. Next slide. A lot of people ask us how this program will interact with other leaves. And for the purposes of paid sick leave and paid family and medical leave, an employee may not take both at the same time. It is the employee's choice whether they want to use their paid sick leave or paid family and medical leave. They can't be forced to exhaust one before they can apply for our program. They cannot take them at the same time, so they can't earn more than what they're making. In most cases with paid family and medical leave and with FMLA, the leaves will run concurrently. Now, there are examples where that is different. So like I showed you earlier, our definition of family is a little more extensive than FMLA. So there might be situations where an employee is not covered under FMLA and is covered under paid family and medical leave. Also, our hour requirement is different. We require that it's 820 hours portable, while FMLA requires that an employee work 1,250 hours for one employer in order to qualify. So again, there's circumstances where an employee might qualify for paid family and medical leave and not qualify for FMLA. We don't know exactly what that'll look like. We're still working on that. Next slide.
And can we actually go back to
Sure.
the calculating business slide? We had a question that says, if
Sure.
small business employers elect not to pay anything, we need to collect just 0.252% of employee wage for premiums due?
Yeah, you would need to collect. I don't like to say that number. I know that that's what is 0.63 of 0.4%, but we lose some numbers in the rounding. So we really are encouraging people to do that two-step formula. So you would need to collect whatever 63% of 0.4% of their gross wages is. So if we could go back to, let me tell you, the slide that gave the formula example, the premium calculation, slide 12.
Mm-hmm.
For if you choose not to pay as an employer, you would still need to, in this example, pay $6.33 for your employee. But you don't need to pay your own $3.67.
Does that answer your question? Thanks for clarifying that up too about the 0.252 versus the 0.004 plus the point.
Yeah, I know. A lot of people want us to give like that one-step formula because I know that would just be easier, but we've noticed through our examples that, it's pennies off, and I know that that can add up, especially if you're a small business and stuff, so we just want to make sure that people are doing the correct formula.
Yeah. Great, thank you.
No problem.
I will get us to the new slide. Collective bargaining agreements, I think?
Correct, yes. So, collective bargaining agreements, I don't know if anyone has one, but just as an FYI to put out there, if a CBA came into existence before October 19, 2017, for the purposes of this program, those employees aren't a part of the program. So they're not a part of the employee count, and you don't need to collect hours and wages from them. If it came into effect after October 19, 2017, then you can they are part of the program. So they are part of your employee count, and you can start deducting those wages from them. Next slide. I put this in because I know this is a small business, so some people ask us this question. So if you're an independent contractor or if you're self-employed and not receiving W-2s from your company, you are also eligible for this program. You can tell us that you're opting in. You have to opt in for 3 years. And then you would just have to tell us 1 year after those first 3-year periods. And you would just pay the employee portion of the premium. So this is also a benefit for employers if they choose to participate in it. Next slide. So we have something called voluntary plans, and I like to talk about it a little bit just to give people an idea of what we have out there. A voluntary plan is an employer saying that they themselves want to administer their own paid family and medical leave. So they're saying, we already have something like this, and we would rather do it than Employment Securities Department do it. You can do that. You're essentially building a concrete wall, but you can't just say, I'm opting out. Employment Securities Department has to grant your voluntary plan. So you have to apply for a voluntary plan through Employment Securities Department. We have to say that we're okay with it. There are caveats, and I like to tell these to people. If you choose to do a voluntary plan, it has to be equal to or greater than what the state offers. So that's the number one thing that we're looking for in a voluntary plan. The other thing we're looking for is that all employees are covered under the voluntary plan. You can't say, I'm going to cover this group of employees and I'm going to put this group of employees on the state plan. You can't do that. You have to have all of them or none of them on your voluntary plan. There are more information on our guide. We have a very concise guide on how to do this and give you examples of what we're looking for so that you have a sense of how to do that. Next slide.
And we actually had another question come in.
Sure.
What if the employee does not work 20 hours a week? Will their pay be deducted? I'm not sure if you know what she means by that question.
I do. I just was taking a quick sip of water.
Okay.
So I know that sometimes the number one thing I say with this is remember that these are portable. So if this employee doesn't work 20 hours a week, they might work at another job and you don't know that. And so just know that if they do work other jobs, they could still hit that 820 hour mark. Now, if that isn't the case and they will never hit that 820 hour mark, we do have something called a conditional waiver. And the conditional waiver is for somebody who 100% will never hit that 820 mark. You would sign it, they would sign it, and then ESD must approve it. If we approve it, then you don't have to collect the premiums on that employee. But if that employee, whenever they hit that 820 hour mark in a qualifying period, if they work more than they work 821 hours, that waiver becomes invalid and you and the employee have to back pay what hasn't been collected. And it could accrue some penalties as well. So I always tell people, I know that you might think that, but just make sure 100% that they will never hit that 820 hour mark.
Great, thank you.
No problem. So implementing in phases, I haven't really talked about the phase approach too much. If you saw at the beginning, our timeline was quick. This passed in 2017, and this program has to be in full swing by 2020. So it's a quick turnaround for us. And so in order to do this and be the most effective, we have taken a phased approach to this program. What that means is that we're passing everything in phases. That includes rulemaking. Right now, we just finished our last phase 2 of rulemaking to make sure that we're ready for 2019. So we know all the rulemaking based on employers and what they need to do for April. What we're still working on is what this will look like in 2020 and what rules. So I don't know exactly how an employee will apply. I don't know all the things that would be covered. I don't know how we would verify things yet. We are looking at that. And if you see, that's why I put this slide in here. It lets you know when we will be reviewing those because we really, really want people to participate in our rulemaking. We're really trying to make a customer-centered product so that it is the best product in Washington. And to do that, we're asking people to participate in our rulemaking. So if there's something that you feel very strongly about or you think that this would be a great way that you could apply it to your business, I highly recommend that you participate in our rulemaking process, and I will give you the website for that at the end. Next slide. I'm really excited to talk about this. We just released this a month ago, but this is called our Employer Toolkit. I highly recommend you go download it. It's right off of our website on paidleave.wa.gov, and I will show you that later. It has how you calculate the premium, so that formula. It has responsibilities as an employer. It has a lot of information for you. But the thing that I'm most excited about is it has that pay stub insert. That pay stub insert is a great way to let your employees know that this is coming for January 1st, 2019. When they see that deduction, they're not going to come to Employment Securities Department and ask us what it is. They're going to come to you. And this is a great way to prepare them for that. So you can print that insert out, put it somewhere where people, are seeing. You could also put it in a pay stub envelope if you do those. This is a great way to let your employees know that this is coming. Next slide.
And we got another question. So if you are a sole proprietor that opts in and pays the employer portion only, do you also need to submit wages and hours worked reports?
So if you're a sole proprietor, you wouldn't pay the employer portion, you would pay the employee portion, and you would report hours and wages. That is for us is just to make sure that you've met the qualifying 820 hours, which I'm sure you do if you're a sole proprietor. I know that's a lot of work. And also It's for us to give an idea of what your weekly benefit would be, because we have a formula to figure out how your weekly benefit would come out, and we have to have an idea of what your wages are so that we know what to pay out.
Great. Thank you so much.
No problem. So like I said, with this phased approach, that means a lot of things are still coming down the pipeline. So we don't know exactly what the application will look like. We don't know what the benefits will look like yet. We don't know how the reporting will look like. We are still working on that. We will be releasing that information. So if you want to stay up to date, I highly recommend you sign up for our newsletter, because as soon as we know how these things will work, we will send out that information and help guide you through that process. I talked about our rulemaking. We're still going on about that. Our benefits just started this month, so we're really excited about that. And our customer care team is taking questions now. So I know there's a lot of information that I've given you. I know that as you're applying it to your own business, you're going to have a lot of specific questions that I may not be able to answer right now. So this is a great time to get email or call our customer care team so that they can walk you through the process of how as it will apply to your business. So those are the great 3 resources that we have for you. Next slide. We also are doing webinars. I'm also happy to come back and do this lunch webinar series as well, but just so you know, we're also doing webinars. So if you're interested in maybe a voluntary plan or other information, this is a good way to get that information. And I just put the law on there because sometimes people like to see what the law is. Next slide. So here's all that information I kept telling you I would give you. So that email address, that's our customer care team email address. So as you're working through this and incorporating this into your business, if you have specific questions, this is a great resource. They will answer your questions and help walk you through the process on how this will apply to your business. You can also pick up the phone. There's their phone number. Our website is really comprehensive. I think before you pick up the phone or write an email, go to our website. We have really great tools there. We have a great way to describe things. We have our employer toolkit. I highly recommend you read through those because we answer a lot of the frequently asked questions through those. Follow us on social media, sign up for our newsletter. That's the best way to get to know things as they're coming. Because of this phased approach, things come out fast and we're working on them constantly. Our employer toolkit is getting updated. Things are working constantly. That's the best way to get them first, to make sure that you're the first one to see what's coming. And then, like I said, if you're interested in our rulemaking process, public comment forum right there, that's a great way to really be a part of the process, listen to hearings, participate. We have listening sessions. You can post questions. So that's a great way to be a part of the process as well. That's all I have. I'm happy to answer any and all questions now, so go ahead.
Great. Okay, so we do have another one already. So if business owner who is, and then in parentheses it says single mother LLC or single member LLC, also gets a wage from the business, is she eligible?
If she gets a wage from the business, then she is in the program. If you're getting a W-2, chances are you're in the program.
Okay. Does that answer your question? Feel free to type in any other questions we have for Sylvia while she's on the line, or you can, if you would rather not type but you'd want to just ask them. I see that everybody's muted themselves, so just go ahead and unmute yourself and you can ask. Oh, great, and Lori said that did answer her question. Well, I don't see any other questions coming in, but I just wanted to thank you so much. I think this is great information, and I think it really is going to be so applicable to everybody on the line here and so many of our other small businesses that we work with. So I'll make sure that everybody on the webinar today, you'll get the recording of this, because I can tell that even just looking at it, when you actually get into it, you're probably going to want to reference this as well as some of these resources that Sylvia's told us about, and then also the slides, just in case you want to take a look at it. And yeah, thank you so much for being here.
Thank you. I really appreciate the opportunity.
Yeah. And we'll, just Sylvia, just so you know, I'm going to post this to our website too, because I think that way more than just the people on this call today need to know about this. So absolutely. If you think of any
Great, really
other
appreciate that.
questions after, I definitely encourage you to check out their website. It looks like they're ready for you to do your research and get your questions answered there. But contact these email or phone number, or you can contact them with WCWB, and we can see if we can steer you in the right direction. If there's nothing else, I hope everybody has a great rest of your Wednesday and a great rest of your week, and I will see you guys all next week.
Thank you. Bye.
Thanks. Bye.